AITA, CPA with AITA Tax and Accounting, and for this week we will be talking about LLCs and S-Corporations. And I love talking about this topic, because my company concentrates on small business owners and pass-through entities. So I love giving tax tips to help lower that tax bill for my clients. S-Corporations and LLCs, they're both great entities. They both offer that legal protection, operational advantages, and the pass-through income to the income tax return. But if we're talking about taxes, LLCs do not save on taxes. Yep, you've heard that right. LLCs do not save on taxes. LLCs are great for asset protection, for long term. But if your company makes more than $30,000, $40,000 a year, you have to consider converting it to an S-Corporation. Why? Because the net profit in an LLC, all of it passes through to the personal income tax return, and all of it is subject to something called self-employment tax. The self-employment tax, that's your FICA taxes, your Social Security, your Medicare, okay? But all of it is subject to self-employment tax. Versus an S-Corporation, only the salary portion of the owner is subject to the self-employment tax, but not the distribution, which is great. It's a huge tax saving for small business owners. Let's take a look at an example, because I think if you see it, it's better to really understand it. So let's consider two entities. We have an LLC here, we have an S-Corporation here. And for just simplicity reasons, let's say that both of them have a net profit of $100,000. And when I say net profit, I'm talking about after you have paid your cost of goods sold, your utility bill, your telephone, your office supplies, and all of that. So you have a net profit of $100,000. So now with an LLC, when you come to prepare your personal income tax return, all of the $100,000 will be subject to self-employment tax. And that's at 15.3%. That's a lot. This is $15,300. Because now you're the employer and you're the employee. You're paying both Social Security and Medicare as an employer and as employee. And so this is self-employment tax on the full $100,000. And after that, you have to pay federal income tax rate, state income tax, and local tax, depending where you live, on the taxable income. This is crazy. Now, if you have converted your LLC to an S-Corporation, which of course you can, you just have to fill out a form and definitely consult a CPA or a legal advisor to help you with that. You need to fill out Form 2553 to convert your LLC into an S-Corporation. And under the S-Corporation, you're required to take a salary. Okay? Only the salary would be subject to self-employment tax. The rest is distribution, dividends, owner's draw, whatever you want to call it. And that is not subject to self-employment tax. Only the salary is. Now, you're supposed to take a reasonable salary under the IRS. How much is reasonable? Well, it depends. I mean, accountants and CPAs, they vary with their opinion on this. But we follow a matrix. We try not to be too aggressive or too high. Try to be reasonable on the salary that we give you, so you wouldn't be questioned on an audit, and at the same time we don't want you to pay more self-employment tax than you should be paying. So let's think 40% is a good number. So $40,000 is your salary, and only on that you would pay self-employment tax of 15.3%, and that is $6,120. Look at the difference. Self-employment tax under LLC and self-employment tax under an S-Corporation. That is a difference of $9,180, right? This is huge. You can use that for your retirement, for your advertisement, to grow your business, do whatever you want with it. But this is a huge tax saving. So only the salary is subject to self-employment tax, not the $60,000. If you have any questions or would like to suggest a topic for next week, please comment below. And don't forget to give us a like and subscribe to our channel. We would love for you to give us your opinion. Visit us at AITAtax.com. Thank you.